Hi, my name is Eliška. Welcome to Axiory's new broadcast. Here is the latest high-impact market news from January 10th. Asian stocks climbed as China exports, data topped economist forecast, and Japanese car makers rallied on a weaker yen. Stocks extended gains after China's exports rose 14% in December from a year earlier, while imports increased 6%. The Customs Office said today the pickup in overseas shipments beat the 5% median estimate of 40 analysts in a Bloomberg News survey, and 3% increase the previous month. And other high-impact news, ECB policymakers will begin the first meeting of the year in Frankfurt with the euro area debt crisis showing signs of waning. And Mario Draghi might be spared from having to make the thorniest of interest rate cuts. Improving confidence indicators have eased pressure on the European Central Bank president to reduce the benchmark rate from a record low, a move fraught with the unknown consequences of possibly pushing the deposit rate below zero. While officials discussed a cut in borrowing costs last month, only 5 of 55 economists in the Bloomberg survey predict that outcome today. Now, on my left, you can see the most important upcoming fundamental news for today, selected for you according to market movement significance. Here are the major currency pairs. At first, the euro declined against the dollar during the last 24 hours as investors stayed cautious ahead of the European Central Bank meeting later today. However, Herman van Rompuy, the European Union president, explained on Wednesday that the euro area economy after a decline last year was probably going to resume increase in 2013. In the meantime, a long-term bonds auction was successfully finished in Ireland that seems to be returning to markets just over 2 years after its bailout. As for the economist front, gross domestic products in the Eurozone declined in another quarter, the third one in line. On the other hand, Germany industrial production continually increased. The outcome of the ECB interest rate decision scheduled later today will conclude trading trends in the pair today. Sterling fell against the dollar during yesterday because the shortening trade deficit failed to shrug off the overcoming weakness in pound that succeed a recent draft of disappointing economic releases. Investors strongly await the BOE interest rate decision in the UK as a result of their speculations that Mervyn King might keep the volume of its bond buying program at £375 billion and the interest rates at the record low 0.50%. However, some market contribution anticipate the bank to flag the possibility of rate cuts later in 2013. And finally, the dollar-yen. Yesterday, the USD strengthened against the yen. This morning, data revealed that Japan's leading economic index increased from December yet, but did not meet the expectations. The current account balance numbers will influence this currency pair later in the afternoon. Finishing up our broadcast is the multi-trader section. Today's multi-trader strategy is Fibonacci and fractals, which is one of the high-risk strategies. It made a 2.65% profit last week, and today we have chosen its ratio of currency pairs traded to give you more insight into the strategy. In this month, the strategy traded mainly the Australian dollar pairs, as you can see from the chart. These pairs make up 54% of trading, with another 23% belonging to the sterling pair, and the rest of the time it uses New Zealand dollar and euro pairs in 15% and 8% of trades. All of the strategies with information about performance and other characteristics can be found on our website. That's all for today. Tune in tomorrow for more in-depth currency news that matters to you. Don't forget to check us out on Facebook and Twitter. Goodbye.